Is December 24th, 2024. It's Christmas Eve. I hope you guys are having a great Christmas so far. It was a happy end markets. We had a bull trend. We had the rally. It continued from yesterday. Yesterday we sold up. So actually it's a 3-day rally. I'll do it on this chart. 2 days ago on the 20th, we rallied. Then on the 21st, or whatever, we rallied, pulled back, testing the 50% level, and then we rallied again. Excuse me. Within this rally, we rallied, testing the highs here and created a double top, and that led to a minor sell-off. Most reversals are minor, and here, although it looks like it can become a double top, if the EMA found support on the higher time frame. This is the 45-minute EMA, and we rallied. Had a buy the close rally, a pullback, and this today it was like multiple reasons for the market to get a second bull leg. So here we have a leg one, pullback, leg two, leg one, pullback, leg two, and then we have a right here spike, pullback, and channel. And then if you don't, I didn't read all that context before I traded today. I did trade today. I bought the close of bar 3 and I scalped out around here. I bought 9 and I scalped out here, and then I bought 18 and I scalped out for a break even trade on 24 or 23, one of these two bars. So 2 winners and a scratch. It was a bull trend. We had a gap up, rally, 7-bar rally, first pullback, bar 8. It's actually a really good buy. There's a gap open right here. Bar 9 is a buy to close bar. That's what I bought. That's my favorite. Leg 1, pullback, leg 2 is pretty much all I trade. So yeah, pretty good day in the markets for a half day. You got the Santa rally. Now we can kind of see this kind of bull channel going on. Bulls are finding support around here. We can use the ray to project it. This is the daily chart. I updated some of the charts and that worked out. So there's support, 4 touches, not too bad. Sometimes it overshoots, sometimes it undershoots. We have been in this channel for quite some time. Let's see, from here to here maybe. It's close enough. I'm not trying to make an accurate channel. I'm just trying to show you guys visually what I'm looking at. So yeah, been in a bull channel. We are at the channel lows and we reverse higher 50% of the time. A breakout below channel will fail. Bulls definitely want to make a new high. Bears want to create a double top at the previous swing and sell off. And they still want to get a leg 2 of this move here. They still want this leg 2. But now we're in a training range. Training ranges get delayed second leg. So who knows when that second leg is coming. If it ever comes. Because we have a tail here. That trader wouldn't take past the 18th low. So that technically met the minimum for second leg. It was a hidden second leg. So what I mean by that is leg 1, pull back, leg 2, and it rallied. In training ranges, we get second leg traps, testing this breakout point here. So we have a 3-bar rally. My setup is 3 or more bars and then pull back and look for continuation. But when I have a 3-bar sell-off and a 3-bar rally, I use the same idea for looking for trades to read context. So I mean, we're range bound. And we are trading at range highs, so maybe the second leg comes in the form of a deep pullback for this rally, and then we get some sort of higher low, double bottom, 150% pullback. We don't really know. We won't know, but we can read the context with the bars that are printed. And right now we have 3 bear bars and 3 bull bars. I think the bulls have better chance. We are trading at resistance right now. We broke through the EMA, so the EMA typically acts as resistance. We're coming close to this bar's high. But we've been in a bull trend for almost 2 years. So for years. Oh my God. We've never not been in a bull trend, I guess. So that's kind of funny. But the most previous price action since August 5th has been a bull channel. So we broke out. Bears broke out and then reverse, resetting the market cycle. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4, pull back, leg 5. Look at that leg right there I drew. It was deeper, so we're definitely going range bound. Bears took out the market structure to the left, so that's not good. They haven't broke past this bar, so there's still some bull gaps open down here, but bears definitely want to see oblivion. They want the markets to go to oblivion and everyone to die. No, I'm just joking. I probably shouldn't have said that on Christmas Eve. Um, 15-minute chart. This is the 15-minute chart and the 45-minute EMA. Not really using the excuse me. Not really using the 15-minute 20 EMA because on the 5-minute I use the 45-minute EMA for context. So we'll just keep that. I'm more concerned about the bars, not necessarily the EMA on the 15-minute chart. So yeah, this is the daily chart. This is the this is the daily EMA. This is the 45-minute EMA. This is the daily chart. This is the 15-minute chart. And the reason I switched it is because I do look at the 15-minute chart intraday. I don't have it next to the 5-minute, but I like to look like, okay, this is my setup, right? This single bar alone right here is my setup. This is my setup. This bar is my setup. And how is it my setup? Well, fractal price action. Let's see if I can do this correctly. So this bar. I didn't do this today. I'm just giving you guys an example when I do this. So I just said that these 3 bars are my setup because they're 15-minute bars closing on their highs with no tail. So now we go to the 5-minute chart. Here's 3 bars. 1, 2, 3. 1, 2, 3, 4. Okay, so 1, 2, 3. 1, 2, 3. So that it's just like a little bit quicker, just adds a little more pressure to what I'm reading. So that would probably look something like this actually. And there we are. There's the 3 bars. So the low's right there, the low's right here. You guys get it though. 1, 2, 3, 4. So we're looking at these 3 bars. 1, 2, 3. 1, 2, 3. 1, 2, 3. This bar's high, closes on its high. And that means that a 15-minute bar closing on its high is 3 5-minute bars. You guys get what I'm saying? It's fractal price action. If you guys were experts at reading the 5-minute chart, and I'm not, a 5-minute bar closing on its high right here, bar 15, is 3 100-second bars. And if you could trade the fractal nature, you could trade the 100-second chart on the 5-minute chart, knowing that, hey, my setup is printed on a different time frame. So here we have more than 3 bars, but on the 100-second chart, here's 3 bars, here's 3 bars, here's 3 bars, here's 3 bars. 1, 2, 3, 4. So that's 5 3-bar microchannels on the 100-second chart. Leg 1, pull back. Leg 2. I'm not trading like this. I'm just trying to explain to you guys why I look at the 15-minute chart. So why did I do that? Hold on, let me make this nice. Okay. See, so there's your leg 1, leg 2. Low of the low tail on the 8-minute. Excuse me, on the 8th bar. Leg 1, pull back. Leg 2. Leg 1, the tail's right here. Leg 2. And then we have this, leg 1, pull back, leg 2. Here we have a bar, leg 1. We're in trading range now. We're in the 3rd leg. So bar 18 got a deep pullback and it got its 2nd leg. So that's why I'm really focused on second legs, market channels, market cycle, because it's the fractal nature of the markets. You just keep focusing on one thing over and over and over and over again. And soon, right now I'm trading higher, like I'm looking up, so I'm not trying to hurt my head looking down at the 100-second. But what I just showed was how I do the 15-minute. Like, okay, this is gonna get a pullback at the 2nd leg on the 5-minute. That was these bars. So pull back, 2nd leg. And you can start to tie higher time frames together. And that's why I wasn't looking at the 45-minute, because I couldn't actually in my head piece together what 3 of these is a 45-minute bar. So 3 times 5 is 15. I couldn't piece together 15 bars looking like on the 45-minute chart. Now we're talking about it slowly. Yeah, this is one 45-minute bar. This is the tail. And then look, we go to the 45-minute chart. Oh, I was wrong. See, you guys see exactly what I'm talking about? Wait a minute, how the hell? So this and that is the tail. See what I'm trying to say is the trader's imagination. Oh, I see, because that tail is hidden. So this is the tail, that body is in there. So 9 5-minute bars equals 1 45-minute bar. And that is my setup as well. Hope that makes sense. And if it doesn't, you just keep focusing on the market cycle, the 5 minute time frame through one perspective, and you guys will get this. I not trading crypto, but I've been looking at charts and the market cycles there, 3 bull bars in a row is there. I started looking at Bitcoin futures just for shits and giggles. It's everywhere. The market cycle is everywhere. Gaps are everywhere. So I think it's really important to have a strategy that can be applied across all markets, all time frames, all of life. No, I'm just playing, but you guys get the picture. Anyways, I've been rambling for 10 minutes. We haven't even talked about the chart. Excuse me. Let's get into it. So bars, we have a gap up with follow through. Bar 1 has more tail than a body. Bar 2, 3 is follow through. I bought the close here looking for a scalp because I thought there was good bull pressure. Actually, you know what's funny? NinjaTrader somehow doubled my position, and I traded 2 micros. 2 micros, and somehow I was in 4 micros, so I didn't even wait for this close. I just scalped out because I didn't like sitting. This pullback erased all my yesterday's gains, which is ridiculous, but we've had volatility. Oh, wrong one. We've had volatility. So yeah, look, see 5 points that's $100. And I made about 150 yesterday. Made another 150 today. Give or take $5 or $10. Anyways, I went for a scalp here. That was successful. Then I see the bars print. I wanted to buy bar 8, but I was skeptical on the swing here. And if we had 3 pushes up. Like now I'm looking at it, it's not as scary as I thought it would be buying the low of bar 8. Anyways, I bought bar 9. Bar 9 is a good bull bar, closing on its high in a bull trend with gaps open. We have a gap open here. We have the morning gap. Gap open here. Gap open. And then we go sideways. Fractal price action. 9 and 10 should get a second leg. And let's say 10 never happened. 9 is a bull bar closing on its high. So there's 3 100-second bars here. Bar 11 pierces that low. So fractal second leg. You can buy that. You can buy the close here. I was already in the trade, but I definitely was counting. Bar 5 is the first break. Leg 1, pullback. Leg 2, opposite bar. Pullback. Leg 3, opposite bar. I counted that wrong. Leg 1, pullback. Leg 2, pullback. Leg 3, pullback. Leg 4. You can count, or if you're only counting bull bars, there's a trend line right here. Leg 1, pullback. Leg 2, pullback. Leg 3. The point is we're getting high in a range, and we're in a range even though we know this is a bull trend. When we see the third leg, we already know the range is going to start wrapping. That's why I scalped out instead of holding, because I had a feeling there'd be more range bound price action. I bought bar 18. So bar 9 strong enough to get its own second leg. Bar 11 is the beginning of that second leg. 12, 13, 14, 15, 4, 5, 16. 4 bar 1, 2, 3, 5 bar micro channel rally strong enough to get its own second leg, but we're high in range. When we get deep into that range, I didn't even do a sound check. Oh, I'm gonna be so annoyed if my sound is off. Well, we're going with it. I lost my train of thought because I just realized I didn't check the sound. So, leg 1, but we're in the third leg. So the probabilities for continuation significantly go down when you're in third leg. Today was a small pullback trend, which is the 5% of the time third legs and probabilities shift. However, for the majority of our days, we're about 70 to 80% of days we're going to be in a trading range, and that means the probabilities for continuation on a third leg go significantly down. I thought we were in a small pullback trend, so I was willing to buy 18. However, the market started to go more sideways, 20, 21. So I scalped out. I think I scalped out on the high tick. I scalped out for like 1 tick profit. So I bought before it closed ish. I was in the red, and then I was in profits for like 1 or 2 ticks, and then I got out. I also thought the market ended on bar 30. It went to 45, so that kind of sucked. But so now we have this is trying to get its own second leg. Again, the longer we go within the trend, leg 1, shallow pullback. Leg 2, yeah, you can say there's still a trend line here. But what I'm trying to get at is the leg 3 pullback was way deeper. It took longer. It was from 15 to bar 24, so about 9 bars for a small push up before it takes out lows. Now we have that first strong trend line break. You could say this is the first strong trend line break here. There's many trend lines. However, if you're not sure we're in a trading range, bar 29 should be telling you like, hey, Bears just made money selling highs. We are in a tight trading range. It's either buy low or sit out. We had enough. Let's see. Yeah, I mean, right there is 14 points. So you could still technically buy bar 30, but tight trading ranges is tough for breakout traders. So as long as you understand that when you're looking, because we're going to look for a second leg for these 3 bars, you're going to have to be buying low, and 18 was the low. So you buy that and you get this rally. These bars 31 to 36 strong enough to get its own second leg, but we're in a trading range. 37 trend line break, 38 sells below the EMA and reverses higher, trapping bears. They need a double bottom 40, and then we rally, 3 bar micro rally, shallow pullback 45, closing above the higher time frame, closing above the 20-minute, closing at highs, keeping the gap open. Bulls are in control. We were breaking above the EMA again. This bar has never got a printed third leg, a visible third leg. It got a it never got a visible second leg, but it did get a implied second leg on the 20th. So it'll be interesting to see what happens at the high of this range. We have 3 bear bars in a row, 3 bull bars in a row, so that's range bound price action. You guys know the deal. Let's draw these gaps in. Full gap here, gap up, 1, 2 gaps there. Here's another gap. So now we have 2 body gaps and 1 gap up at the open. When that happens, that's characteristics for small pullback trends. But the majority of the time, the open will reverse. However, this time it trended. We have another gap here, so now we have three gaps open. You guys got to be thinking at least trend or not short. If you're shorting, I don't even know. I don't mean to sound rude when I say that, but I don't even know. I was definitely, this time last year, I was definitely shorting the uptrend. So please don't take it personally. I'm sure you guys will laugh about it eventually. I hope so. You'll either learn through your losses or learn through the price action, not to short the damn uptrend. And I'm probably still gonna short the uptrend eventually, but I'll be quick to scalp out because I'll be looking for that nightfall. Anyways, guys, happy Merry Christmas Eve. Hope you guys had a good one. My shirt is red. My coffee is hot. I hope you guys are doing good. If you learned something, share the show. I'll talk to you guys on Thursday. Have a very Merry Christmas. Thank you for your support. Drop some questions. I hope you guys made some money. Have a good one, everyone. Bye.